Okay, guys, welcome to Stock Snipers weekly webinar where we do 2 to 3 webinars per week. And in tonight's webinar, we're going to go over and introduce Bollinger Bands and Fibonacci Retracements. And these are main chart indicators. These are plotted with your price action. They're not subchart indicators like MACD, stochastics, and RSI, which are below your charts. These are incorporated with your price action on your main charts. Again, when we get started, guys, I've muted everybody. We're going to get through the webinar, and then for the first 60 minutes, and then the last 30 minutes, we're going to have question period where I'll open up the floor. You guys can unmute yourselves, ask questions, or in the chat box. I'll read everything in there. But hopefully enjoy this tutorial, guys, and let's get started. First, I'm going to start off with Bollinger Bands, and then I'm going to move into Fibonacci's, because Fibonacci, I'll show you guys the strategies for swing low to swing high, and also swing high to swing low. But let's first get into Bollinger Bands, guys, okay? And welcome, everybody. Okay, so these are Bollinger Band indicators right here. And they're straightforward. They're set at default settings on every platform, whatever you use, TradingView, Webull, Thinkorswim, whatever platform you are using, they'll be under your indicators. And we'll move over to TradingView and I'll show you where they're located and how to plot them and things like that. We'll go into some live trading right after this webinar. So these are Bollinger Bands. They come in, when you select them, they have 3 lines, okay? You have your upper Bollinger Band, and you have your lower Bollinger Band, and then you have your middle signal line. So in this diagram, we have our upper Bollinger Band is red, our lower Bollinger Band is green, and then the middle signal line right here is with the white line. So I'm going to go over what these are. And the Bollinger Bands are also known as volatility bands. So we know what volatility is in the markets when we have open sessions, New York, London, Tokyo. When big markets open up, we have volatility in the markets. When there's impact news events, red folder events, NFP, FOMC, anything with unemployment, things like that, those are red folder. That's when we're going to have volatility. So you're going to start to see, if you're using Bollinger Bands with your price action, you're going to start to see them start to expand. So what I'm going to talk about right now is over here, you see when the bands are really tight, they're very close together, they're coiled. It's like a spring. This is when they're contracted. In other words, it's consolidation. When you have a very tight Bollinger Bands, that means price action is coiling up, it's consolidating. This is where we want to use a sniper trap and gap strategy, and here box all this price action in. And then what we're waiting for is for the bands to start expanding. So over here, you see B, the Bollinger Bands are starting to expand. See how they're opening up? What that's telling us is we're moving from an area of consolidation to an area of volatility now. So this could be like an open market now going into New York session. Maybe we have a news event that's causing this volatility. But now we have a breakdown in structure and the bands are starting to expand. So this is now opening up the volatility, and now we just have to follow our price action. So now we're moving to the bottom of the band, and then our signal line acts as a support and resistance. So see how it tests it up here, the white line, and gets rejected, and then it comes down further. Again, it pulls back, but now we're diverging away from the signal line, and we're now hugging the bottom of the Bollinger Band. So now you see price action is in a bearish downtrend, making our lower lows and lower highs. And we continue until we find some good support. Maybe we find a higher time frame support down here, and we always have these plotted, maybe our hourly support, maybe a daily support. Remember, these are 5-minute candles, so we will eventually find higher time frame support. And you can see now buyers start to come in. So the lower Bollinger Band down here acts as a support level, and then we start to get some nice bullish candles reversing. And this is a key area now. So when we break, and not just impulse, but when we close with volume above our white signal line, this is now giving us a signal that the trend might be moving up in a bullish direction up to our upper Bollinger Band, which is now our resistance level. So you can think of the upper band as resistance and your lower band as a support level. And then the mid line, the signal line, it's kind of like your psychological midpoint line, like how I use 50 on my RSI. This is kind of like your psychological psychological midpoint. If it comes up here and gets rejected, then it's possibly going to come right back and test the bottom of the Bollinger Band for support again, for maybe making a higher low or continuing to break down the trend. But here we have volume close above. This is the first time we've seen volume close above the white line, and here's our retest. You can see we close above, there's the candle, and there's our retest. And now we start to see the buyers take it all the way up to the upper Bollinger Band. But you're following your resistance up here and here. Now we have a lower high. So we do have strong selling pressure, and then they push it back down. And again, here we have buyers try and save it at the signal line, but then you have a big bearish engulfing candle continue to the downside. Eventually it comes back in here, and then you can see that the bands start to tighten up again. And then we get into an area of consolidation where they start to contract. So think of Bollinger Bands as volatility bands. When they're tight, they're coiled together, contraction, that's consolidation. That's a great indication to maybe set up a trap box, and then you're waiting for a breakout above or below. And as your bands start to expand, then you'll start to see price action moving with nice volatility to the downside or to the upside. And so let me just give you a brief overview. Bollinger Bands were created in the 1980s by a financial analyst named John Bollinger. These bands calculate the volatility in the market through complex technical analysis. Additionally, the Bollinger Bands can be used to identify overbought and oversold conditions, similar to our RSI indicator, as well as a trend following indicator. Basically, if the price moves closer to the upper band, it indicates an overbought condition. However, if the price moves to the lower band, it indicates an oversold condition. And remember, this is not guaranteed. This is not 100%. This just has a high probability when you use these indicators. And remember, these indicators also are lagging indicators. They print after the fact. So always, guys, follow price action and candlesticks. Use these as a guide to your trading, but don't just rely on these for entries and exits, okay? The Bollinger Bands consist of 3 lines: the upper line, middle line, and the lower line, and are separated by a certain number of deviations. They are default at 2 standard deviations on all platforms. So the upper band is deviated by 2 standard deviations from the signal line, and the lower band is deviated by 2 standard deviations. I would not suggest to change those. I would leave them at default settings. Finally, these bands help you understand whether the price is at a fair level to purchase at. For example, think of the middle line as a magnet. Okay, this was as an average price. So as the price drops to the lower band or rises to the upper band, eventually the price wants to gravitate back to the moving average middle line. So think of the middle line as a magnet for the price action. When it starts to get above to the upper Bollinger Band or to the lower band, price wants to come back and consolidate towards that signal line. Okay, and let's just get into the tutorial real quick. So this is an example of the Bollinger Bands. You see we have very tight, we have contraction in here, and we see we could put a nice trap box in here, and then we start to see it break down. This was a little fake out candle. This green candle came up to the signal line, but then we have a nice bearish engulfing candle, completely take everything out. We could get into a sell here with support and resistance, and then we're following price action down. There's a little bit of a pullback right there. We're not even close to the signal line. We're see how now the bands are expanding. We have lots of nice volatility in the markets, a lot of selling pressure. This could have been on news. This could have been a market open, New York, London, Tokyo session. And that's why you're having this big volatility. And now we come back down to the bottom of the bands, and we start to find some higher level support, and then we can start to see buyers coming in. But again, we gravitate towards the signal line right here, the middle line, and you can see here we break above with some volume, and we retest a couple times, this spinning top candle retest, and then we have nice buying momentum, and then you see the momentum go back to the upside to the top of the Bollinger Band, and this acts as a resistance level. And you see price again now wants to come back and consolidate at the signal line and go back down. Finally it consolidates, and you see now the bands are getting tighter. They're contracting for another time of consolidation before we have volatility in the market again. Okay. Okay, so the Bollinger Bands are a technical indicator. It's a main chart indicator plotted on our price action. and there's three lines, the upper, lower, middle signal line, okay? And the middle signal line is defaulted at a 20-day simple moving average. So on our last tutorial, webinar, we went over simple moving average, exponential moving averages. So this middle line, this white line, is always default set at 20-day SMA. So if you want, you can change it, but I would leave it at default, and I would not change the deviations. So above the top Bollinger Band and the lower Bollinger Band, they are separated by 2 standard deviations. Again, if you want to play around and back test and change those, you're welcome to, but I would suggest just leaving them as default settings. And the bands contract when they get tight. Contraction means they come together, and that's signaling consolidation. Price action is trading sideways, cooling off after a big move. We're always going to have that choppy consolidation. And what this is the market makers are accumulating and distributing before they make their next move. Okay. And then the next move is when the bands start to expand. So the market makers have accumulated enough volume to make their next move. So now there could be some market open, there could be some impact news, and now they're going to dictate where they take the currency pair, commodity, crypto, whatever you're trading in that direction, if they want to go bearish or bullish. And these are also used to identify support and resistance. Upper band is resistance, lower band is support level, okay? But I would suggest using your own price action support and resistance combined with this, okay? Because remember, this is a lagging indicator. Your price action support and resistance is your true levels, especially when you have your higher time frame plotted, your daily, your hourly, and like your 15-minute, when you're scalping 5 minutes or 1 minute candles, okay? They hold higher weight than just these Bollinger Bands. And they also identify overbought and oversold conditions. So similar like RSI, when RSI goes below 30, when we come down to our bottom of our Bollinger Band, it's considered to be oversold. And also when we come to the top of the Bollinger Band, it's considered to be overbought, just like when RSI is over 70. But again, guys, we don't take entries on RSI at 30.70. So you don't want to be taking entries just because we come to the bottom of the Bollinger Band or to the top, because these things can continue to move up, okay? The price action can break above the top of the Bollinger Band and continue to move, okay? So just use these as volatility bands to tell you when there's consolidation in the market, and then when the bands are opening up, then you have some nice volatility. That's where the pips are made, okay? So in this example here, we have consolidation. This could be like the Tokyo channel in here. We're coming out of Tokyo session, it's consolidating. Sometimes we get some choppy session. Then we can start to see it starts opening up. So now we have expansion, we can see volatility. Which direction do they want to move it? If I had these candles all boxed in with our sniper chop and gap strategy, I can see volume breaks to the downside, continue to come down. Yeah, there's a little bit of a pullback right here, as expected. There's always pullbacks, but look at where they hold it down below the signal line, and they continue to drop it. Now we start to get some nice bearish candles coming down. Again, we have a nice little pullback, doesn't really break above our signal line. And you can see now the bands are starting to expand. The volatility is bearish now. We have bearish momentum going to the downside, and it continues all the way down, where you can start to see maybe we're reaching a higher time frame support here, hourly or daily. Then we start to see buyers come in. This is a key signal right here. First time we've had volume close above the signal line. So there's our retest candle. We could get into like another possible scalp here to the upside and collect some pips to the upside. Again, when it comes up here, guys, now you're looking, it's got a resistance right here, but our original resistance was right here. So this is now making a lower high. So we have to respect the overall higher time frame downtrend. That selling pressure is coming down when we had the expansion. So maybe this is just a nice little pullback, but it's not really breaking out. So collect your pips, don't get greedy, and then maybe we can sell again and come right back down, okay? You can see here it's starting to get rejected at the upper band, creating a lower high from over here. So now we have back down, coming back down, testing here, some consolidation. Again, we come up, and then now it's just trading in this little channel, contracting, cooling off before the next expansion move. And then we can get in, see if it's building now. the probability that this is going to break up to the upside is in our favor, because look at the candles. They are above the signal line and inside the top of the Bollinger Band. So here I have nice consolidation, but the probability is that this is going to break out bullish. Okay, do you guys understand that? That look at the candles, we're above the signal line and at the top of the band. Okay, and this one, they were consolidating at the bottom of the signal line and the bottom of the Bollinger Band. That's why we had the probability of going bearish. Okay, so I can see price action is below here. This is like when I use my RSI, the 50 psychological level. When we're below 50, we're in bearish territory, similar to this. Think of this as a psychological line. When price action is below the signal, then we're in bearish territory. Now price action is above the signal line, it's in bullish territory, and now we're just waiting for some volatility in the markets, and I bet you that this would continue to the upside. Okay, and then we're looking to break this high right here and reverse this downtrend and start going, making higher highs and higher lows, and this pair GBP USD could be in an uptrend. Okay, and guys, always practice these with back testing and things like that when you're using these strategies, or new indicators if you're not familiar with them. Okay, so this is again, we have consolidation, contraction, you see it here. We have now expansion, opening up. We have a bearish downtrend coming down. Here's a support level. We have the bullish uptrend now, and we cross the signal line, the 20-day SMA. This is key right here. The first time we have now bullish volume close above the 20-day SMA signal line. We get a nice bullish candle coming up, but we don't really break anything above here because we have higher time frame downtrend coming down, and this is the upper band, lower band, and this is the signal line right here. Okay, and then we get into, here's our contraction, and then you can see the probability that we're going to break up is in our favor. And look at this nice big bullish engulfing candle now start to break out, and the bands are starting to expand, so we probably have some nice bullish volume coming into the market. Okay, so these bands are really nice to use when you start to practice with them and you understand what they are. Okay, so you can combine these with your price action trading and your own support and resistance. Okay, so that's Bollinger Bands, guys. I'm going to now go into Fibonacci retracements. Okay, and then I'll show you guys how Bollinger Bands and Fibs look on TradingView right after I finish this one here. Okay, so that was Bollinger Bands, guys. And if you guys have any questions about them, again, as soon as I finish, then we'll go over all of questions. Okay, so very simple, very basic. They're volatility bands, upper, lower signal line. Okay, these are really important. Okay, Fibonacci retracements are levels of horizontal lines that help you plot where support and resistance are likely to occur on a chart, and retracements. Okay, so pullbacks, counter trading, breakouts, these are important. Okay, so I'm on course 43. I'm going to go over, guys, Fibonacci retracements. So you probably have seen these, or maybe you're not familiar with them. Some of you guys are familiar with them. So it doesn't matter what level you are. If you've never seen these before, or if you're an advanced trader with these, then just we'll take it slow. We'll get through it. And then if you guys have any questions after, I'll answer those. Okay, so it's what these are is you get these on your platform. It's a Fibonacci retracement tool. They're automatically inputted with the manual numbers, so you don't even have to change anything. You can change the colors around if you like, and play around with the colors, absolutely, but these values will not change. Okay, so what we're going to do here is I'm going to go over what Fibonacci's are. Okay, so you can plot these two ways. You can plot them from a swing high to a swing low, like right here. If I plot it at the top of this candle to the swing low, and now I want to find the retracement coming up and the possible breakout. Okay, and then you can also plot them from a swing low to a swing high. So I'll show you both of them, how they look. Okay, and guys, I'll answer all questions at the end of the period. Okay, thank you. So Fibonacci retracements are levels or horizontal lines that help you plot where support and resistance are likely to occur on your chart. Each level has a Fibonacci percentage assigned to it. And this is a calculation of how far a prior move has retraced or came back. And the Fibonacci levels are 100%, 78.6, 61.8%, which is the golden zone, 50% is just a plotted number. It is not a Fibonacci retracement number. It's just as a signal line. It's some charts plot the 50, some charts don't, okay? And then we have 38.2, the 23.6, and finally 0%, okay? And these are mathematical permutations. Fibonacci's were invented in the 14th, 15th century, and they've stuck with us. They are natural numbers. They are mathematical equations. Adding 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, 13 plus 8 is 21, and so on and so forth. And that's where we get some moving averages in there, the 21 day, the 13, the things like that. They are gravitated towards these natural numbers, okay? And the stock market, the Forex market also uses these as well. They're natural occurring numbers. We are psychological traders. That's why I always use psychological numbers, things like that, because there's more to trading than just price action. There's the psychology behind it. And we had one of our members today. He had a whole list of psychological trading books, which are amazing, guys. So thank you so much for those. It's great for the community, guys. Good for studying. They're really good books and audio books as well. The psychology behind trading will really elevate you to the next level, guys, and really teach you patience, discipline in the markets, and have a bigger understanding of how the overall markets move. When you know how the banks move, the market makers, and then retailers, it really takes your trading to the next level, guys, okay? And these levels indicate that the price might consolidate in a zone or reverse the opposite direction. The 61.8 zone is considered a golden zone. This is like the heart of consolidation, where we're either going to hold this level and we're going to continue with the uptrend, or we're going to break down and then it's going to be a reversal. Where the price may continue its uptrend or a downtrend if the zone does not hold support or resistance at this golden zone, okay? This indicator is very useful because you can plot the percentages from a high and a low on your particular time frame you are trading. So it doesn't matter if you're a swing trader, if you're looking at daily candles, 4-hour candles, you can still use Fibonacci retracements. And if you're intraday trading, scalping the markets, you can put them on 1 minute, 5 minute, 15 minute, 30, 1 hour, does not matter. These, just like candlesticks, all have common characteristics. Fibonacci retracements, you plot it and it will give you your numbers, okay? So I'll show you how it all works. And 0% is considered to be the start of the retracement, while 100% is the complete reversal to the original part of the move. So if we start to break a complete retracement, now we're either breaking up to the bullish side where we're creating now a new higher high and we're going to have a bullish breakout, or we're going to go below to the 0% and break down where we're going to have a complete bearish retracement, and now we're going to make lower lows and continue to the downside. Okay, so I'll show you how everything looks with the price action. Okay, so these are standard, like how a Fibonacci tool looks. You get it. I'll show you on TradingView. We'll go over there and we'll plot it. It's just a grid. You select it and you go swing low to a swing high point. So like bottom wick to a top wick, or you're going to go opposite. You're going to go swing high to a swing low. You're going to find a candle with a top wick and go to a candle with a bottom wick. And then once that candle formation is done, high to low, now we're looking for the future direction. Is it going to come back up to this golden zone and break out and continue going up, or are we going to come to this, maybe these levels, and then it gets rejected here, makes a lower high, and then it continues to the downtrend, okay, downside. And this is what they look like. Okay, you'll have your plot. Here's the 1, here's your 786, here's your golden zone, 618, here's your 50 psychological midpoint, your 382, your 236, and your 0. And these are manually inputted. They're default settings. Don't change them, okay? But you can change the colors of the lines, like if you want green, red, things like that. And it's also considered that to be the golden zone, this entire zone in here. So the 382 all the way to the 618 comprised of this entire zone can be considered the golden zone as well. But the golden zone is this line right here, 618. That's what's considered the golden line. But some traders, some psychological traders, they use this entire zone as the golden zone, okay? So, and then other traders just use the line. Okay, so that's all personal preference, guys. Okay, so just a quick little overview of what it is. It's a Fibonacci Retracements, our main chart technical tool. It's created by taking two extreme points, an extreme low to high or an extreme high to a low. And these can be used on all different time frames, whether you're a swing position trader or a scalper on any time frame. The ratios again are 236, 382. 0.5 is the psychological midpoint. It's not a real Fibonacci sequence. The 618 is the golden zone, and then we have the 786 and finally the 1. And this also helps identify support and resistance levels. Okay, so if they all represent like levels. So if we're below here, the 236, our next level will be coming up to the next zone, and it will act as a resistance until we break out with the volume above, and then we can go to our next level. It's all levels, guys. So support and resistance. If price action is below these levels, then all of these levels will act as resistance. And once price action starts coming down, they will act as a support level. Okay. And the 618 is considered the golden line or the golden zone. And it's used to identify price retracement. So if we're coming up, we're seeing, will this trend continue? So this way we can stay in the trade longer and maximize our pips, or we could possibly see a reversal. Okay, so this is a really good tool once we get into profits, how to maximize our pips. Okay. Okay, so here's an example of a swing low right here to a swing high. Okay, so let's say, for example, this already price action happened and we're going to start to trade over here. So this is nice when you're coming into a session. You want to see the price action, what it did. You're plotting a swing low right here to the swing high. And now we're starting live trading to see what's going to happen with price action. Is it going to hold these zones and continue to break out, or is it going to start pulling back? We're looking for M and W patterns, head and shoulders, and then more confluence, the better. And then once we start to see we're breaking now into the golden zone, is it going to hold and continue? Maybe just buyers will come in. This is a nice healthy retracement and we'll continue moving bullish. But this is a great example to use. So you'll have past price action. So now it's up to you to come into the markets and plot it how you like. So in this particular example, we're in a bearish downtrend. We're coming down, but we do find some support. And look at the price action, how it comes up. Our next, see how this line are right here, our 236. This is our first level of resistance. It's plotted from 0 to 236. So we have price action now break with volume above it. So the next natural path is to come to our next zone, which is right here, the golden zone. So it could have got rejected right here and came down bearish again. Now it would test this line as a support level. If it broke down, it would come down to here. And then if we broke right here and going down bearish again, we would have created a new lower low, and then bears would have came in and pushed the price action down. But you see that we're getting bullish momentum. We're going right through this entire golden zone, very bullish, closing above the levels. And then we get to our next level right up here, and then see how they hold it down here where it starts to come back. And also what's really nice with the Fibonacci tool is it also gives you a trend line. So you can also do a trend line, this dotted line, as well as give you the levels. So it's like two tools in one. You can also do trend lines. Here was our first trend break right here. This bearish candle broke the dotted line, the trends. We're consolidating here in the golden zone. Finally, price action breaks above. We get a couple rejection wicks, and then they take it to the next level, up to the swing high. So this was all plotted in the past. Now, if we're starting to trade, if we're not breaking above here, then this is a resistance level. And now we can start to see price retracing back down. This will be our first zone. From here to here, this will be our first Fibonacci retracement level of support, the 236 right here. And then our next zone will be here, the 382. If we can't hold there, then it's going to come back to the psychological 50 line. And then if we break, then here. We want to hold, if we're in an uptrend, we want to hold the 618 line, okay? Maximum retracement is right here. If these bears brought it down here, we would want to see lots of buyers come in at the 618 and continue this uptrend. As soon as it breaks below here, then we've lost the heart of consolidation right here. Then it's going to come down to this zone. and then finally down to here, and we might have a full 100% retracement from here coming to the high, back down, and then if we break below here, it's creating a new lower low from here, and we can see price action come down. See here how it's coming down. So we'll see, like, coming into here, we would analyze now how the sequence would play out. Okay, so this is like an example right here where it's now the swing high to the swing low. Okay, so if let's say, for example, we're going to start the Tokyo session, and I want to see this, for instance, for example, if this was gold on the 5 minutes, I can see, yeah, it's coming down, it's in a bearish downtrend, but now I want to use my fib tool. I want to go from my high, this high area, to my low down here. I can see there's nice support, so I plot it. Automatically it will give you your default settings, and then now I also have my dotted trend line right there. It's on my fib tool, and then I can see right here this first bullish engulfing candle took out all of these bullish engulfing candles, very strong. It broke out, and look, it closed, it tapped up here, the 382 zone. It sold off a little bit, but we closed with volume above the first resistance level, and now we broke the trend as well. Here's a retest candle. It opens up, comes down, picks up more volume, nice wick, and then we now get a nice full bullish candle breaking out. This is the golden zone, golden line, 618. We completely break right through that. We get up to our resistance line. Here's a pullback. See this pullback? So this is, we could short this, right? This is the counter trade. So it gets pulled back a little bit, but then you see here, it does not break the 618. They hold it. So now we have the possible reversal. We're coming up here. So now all we're watching for is this break with volume above here, and then we'll get a nice breakout to the upside. So you see how it's a retracement. We broke out here, we plotted it right here, and now we're starting to watch it come down, and then it uses this as a strong support, the 618, the golden zone, and now we get buyers coming back in. All we need now is a few candles to break and close with volume above here, and then we can continue moving up. So if we're in this trade, you see here, we can hold it. We can take out some pips right here, absolutely, on this nice bullish candle. Take 70, 80% out, and then leave a 20% runner, break even. And then when we start to see this, then we start, our runner continues to go, but we can also add another buy order up here. When I start to see a break here, now we're creating a new higher high, and we could continue going up for another 10, 20 pips, okay? So just a quick recap, the Fibonacci retracement, it's a main chart technical indicator. It's created by taking two extreme points, usually a low and a high, and you can do whatever time frame you want. Usually you want to grab the wicks of the candles because you want to get the extreme low and the highs. If you just do the bodies, again, you're missing out on the lows and the highs of that period, okay? So plot it on the wicks. Ratios are automatically set for you at the 236, 382, 0.5 is not a Fibonacci sequence number, but it is plotted for you on most platforms. And the 618 is our golden line, golden zone, 786, and then finally the 1, 0 to 1. Depending if you're going swing low to swing high, that'll change from 0 to 1 or 1 to 0. And this also helps identify support and resistance levels. So you can use each one of these each one of these Fibonacci levels as a support and resistance as well. So if you don't want to plot on your price action, you can use these as well. I like to do my price action support and resistance alongside with these for extra confluence, okay? And we've already spoken about the golden zone, and it's used to identify a price retracement, what I just showed you in that particular example. Okay, so now we're going to move on to a few strategies here. Guys, we're good for time, 7:34, so we're cruising along. I'll get to your questions in just a moment. Okay, so this is an example, course 48 of the Fibonacci retracement technical indicator strategy from the swing high to swing low. Okay, so I'm going to show you this one. So here we have the swing low to swing high. Remember, this is past price action, but now let's say we start trading. We want to see what's going to happen with this. So this happened in the past. So I plot it, swing low to swing high. I want to see the full retracement from swing low. I got the bottom wick, so I plot it right there, see how it creates one, and then I just take it all the way up to these wicks up here. I see we have a swing resistance level up here. It's getting rejected. So that's a perfect area to plot your fib tool. See, I have 1 on the bottom and 0 on the top. Now I want to see, is it going to hold support at my first fib zone right here, the 236? You see, sellers are trying to push it down. Impulse break right there. Volume closes. Again, we get an impulse break. Volume closes. Here we have a really bearish pin bar candle come all the way down bearish, but buyers step it up and then it finishes right here. But you can see volume is starting to go bearish. Okay, I know there's a lot of buyers coming in, but volume is starting to go bearish. We're creating lower highs on the wicks. Everything looks like it's leading to the downside. And then now we have volume right here, and we have a big bearish candle push down. It breaks through the 382, the psychological 50, and then the 618, all the way down to the 786. We almost come all the way down to where this bullish run started up here, okay? But then they hold it right here. So it holds, we get some buyers, and then again, we push down, rejection wick, rejection wick, rejection wick, and then we get a bullish candle come again through here. But look at, now we have a spin top candle. We don't close with volume above this level. We close right here. So you can see we're starting to make lower highs. We're closing with volume below each zone. We're closing below the 0, closing below 236. Now we get another run of selling pressure coming down, big bearish engulfing candle. Take out all of this pullback, take it all out. Volume closes. This is strong. We went right through the golden zone and we closed below the 786. This is the first time we've had volume close below the 786. And what happens next? Bearish candles continuing a nice downtrend. And once you break right here, now you have an entire trend reversal. So remember, this was a bullish uptrend creating higher highs and higher lows. Now you have a complete reversal. Now we break this. We have now new lower lows and lower highs. So now we're in a bear trend. So we could be short selling this right here. Okay. And Fibonacci retracement levels are static, okay, meaning they do not change, unlike moving averages that are constantly moving up and down. So that's key, guys. So when you plot these, remember they're static, they do not change, okay? We allow price action to come into these zones, but these zones do not change. They stay static. When you plot them, they're there, but we follow the price action at these zones. This allows traders to react to sudden price changes as levels are tested to see if support or resistance are rejected or broken. This indicator is neat and simple to use because the levels can last the entire day and only need to be adjusted if the 0 or 100% are broken. Furthermore, this tool is used mostly by technical traders to map out strategic places where transactions take place. These transactions include your stop loss and take profit zones, knowing ahead of time where the buyers and sellers are located. With the addition of candlestick analysis, we know that wicks and tails react at these levels and get rejected. However, if the body of the candle breaks and closes above or below a Fibonacci level, the next zone will act as a new support or resistance and may consolidate in the zone for a bit before making its next move again, okay? Okay, so this is what it looks like. Again, the tool, I'll show you on TradingView what it looks like. Okay, so here we have sniper strategies, Fibonacci retracement strategies. The Fibonacci retracement strategy, it's identifying the overall trend. Are we in an uptrend or downtrend? We plot the Fibonacci tool from a swing high to swing low in a downtrend, or we plot the Fibonacci tool from a swing low to a swing high in an uptrend. And we use the Fibonacci levels as support and resistance for the entire trend. And we identify if price action is above or below the golden zone, okay? Remember, the golden zone is the heart of consolidation. That's where price wants to come and consolidate. That's where normally we have our trap and gap box. I guarantee you, if you catch Fibonacci swing low to swing high, you see price action right at the Fibonacci tool, then that's where you set up your trap and then you wait for the breakout above or below, okay? The more confluence you have, the better your trading will be, okay? But you don't want to clutter your chart with too much, but this one is a nice one to use, okay? So this was the swing low to swing high, plotted from here to here, and now we're watching. If we held up here, the 236, and then we had bullish volume come back and break above here, then we're creating a new higher high, and then we can continue to the upside. But we see price action break below the zones, which is breaking support levels. We get a nice little pullback, but it closes with volume right here below this zone and continues to go down. This candle was big right here. This big bearish engulfing candle took out all three of these previous candles. We broke right through the golden zone and we closed below the 786. So there's your retest. It opens, it retests right there, rejection, and continuing to the downside. Okay, so you're always watching for the golden zone area, because what could have happened with this is you had a trend break here, but there could have been a bullish candle coming up. But if it started to get rejected right here and formed a wick and start coming down, maybe we had bear sellers come in here and then they take it back down to here. And then this could have been just a little minor trend break, but then the bears are kind of continuing to push it down. But this one clearly broke through with volume closing above. So we have to respect the buyers here, breaking right through that golden zone. The golden zone is also where like market makers have their accumulation distribution in here, and it's considered like a supply demand zone, but you see this candle break right through it. They went right through that supply. There is a little bit of a pullback here, but then it holds and then continues to the upside. And then we have our bullish breakout. Okay, the final one I'm going to show you is the opposite. Okay, and then we'll take some questions, guys, and then we'll go to TradingView as well. Okay, and then I'll show you how to plot Bollinger Bands and Fibonacci's on a live chart. Okay, so Fibonacci retracement, the swing low to swing high. This is the opposite now. Okay. Okay, so this one now, let's say we're gonna we're starting to trade right now. We see what price action did. So I can see it's getting resistance up here, and then I can start to see it break down. Sorry, this was the other one. I think I selected the same one. Okay, you know what, guys? We're gonna move to TradingView. I want to show you how this looks on TradingView before we run out of time, because I really want to show you how this looks live. Okay, so guys, if you guys aren't familiar with Bollinger Bands, I'll show you right up here where you can select them. Okay, so I'm on TradingView right now. So I'm going to go back to introducing the Bollinger Bands. Okay, so in TradingView, you come to your indicators. You can select Bollinger Bands right here. And when I plot them, this is exactly what I get. Everything is at a default setting. Okay, the blue line is my upper Bollinger Band. So right here, blue line is upper Bollinger Band right here. Okay. And the bottom blue line, you can change the colors too. Some traders use red for like upper resistance, and some traders use green for bottom support. And then they'll maybe do a neutral color like white for the signal line. Okay, but this is the default settings right here, and this is our bottom band right here. And then we also have our signal line, which is this orange line in here. Okay, that's our 20-day SMA. We have our upper and our lower. Okay, so in here, when price is, see the bands, how they're contracting, they're tight. Then we have consolidation and pricing. So what I would look here, if I was trading, see the price action consolidating, the bands are real tight. You can use your trap and gap strategy here, box these candles in, okay, and carry them right here. And then what we're trying to see is direction right here. This was a fake out, guys. Okay, this was a complete fake out. What they did was they brought the market down to hit some pending orders down here to clear some liquidity. They brought it down. Okay, but this was the first candle that broke down. This is the impulse break. Okay, so now we're waiting to see if our next confirmation candle comes up and gets rejected here and sellers push it down. That doesn't happen. So if you're patient and disciplined, you don't fall for this fake out. What it is you wait for your next candle, it opens bullish, and look at it go straight up where it closes above this candle. And now we're waiting to get above the signal line, okay? And above out of the box. So if you're patient, you see what's happening. Volume is now testing above the signal line, testing here, retesting, finding. Now we start to break out of the box here. So we have a nice little uptrend forming, and we're breaking out of the consolidation. I can see that the bands are tight, so we get a nice accumulation distribution. I'm just patiently waiting to see which direction it's going to move. This one obviously moves nice and bullish. We could get out our tool, we could get in, start getting into a trade here. Where would we place our stop loss? Okay, so you can place stop loss below the consolidation box, or you can also place stop loss below the previous low right there. And you want to make sure you're getting a 1-to-1 on your money. A 1-to-1 is like right there. And if it continues to move, then we'll continue to move up. But right there, the move, if you get into this trade right there, you're looking at approximately 21 pips, okay? So that's a nice trade, 21 pips. And then as we're going up 21 pips, you can take your stop loss, reduce risk, put it right here, half risk, or just eliminate it all. You're in profits. You can be scaling out 70-80% on 20 pips and leave a break-even runner. Okay, so if we leave a break-even runner, we're going to continue to hold this chart like this, and you can start to see it hit the top of the Bollinger Band. See this wick starting to get rejected up there. But we have to respect the top of the Bollinger Band as well. So price action wants to gravitate where? Back to the signal line, this yellow line. See how they break it here? But then it comes right back up. So if you're looking at now support and resistance, we create a higher low from over here. They bring it back down. We hold nice here right around the signal line, and then we get some nice bullish volume coming back. And look at now, we break above here and it breaks out of the Bollinger Band. Okay, so that's why I tell you guys, don't just use this as just because it touches the top of the band to get into a sell, because price action, if it's bullish, it can break right out of there. Okay, so we continue to move. So you can see now your profits are continuing to go up. Your break even stop runner, look, if you had your stop loss right here where you bought in, you didn't get affected by that. You're still in the trade. If you held your entire position, yeah, now you're profiting really nice. You have a total of 55 pips, okay? And you see how it was just patiently waiting in this area of where the band was tight. That's our trap box. This is the fake out, guys. You got to be aware of fake outs. Okay, they happen all the time. This is what market makers do to hit pending orders. There could be a lot of people down here with stop sets right here, buy stops, stop sells right here, and what they do is they trigger them, and then boom, they reverse the market on them. Okay, so just be careful when you're setting those. If you're following live price action, then just wait patiently. Yeah, it's a bearish, it's a nice impulse candle, and it's good for a good amount of pips, but you have to understand when you're trading an impulse candle to not get greedy on these things, because if you take it and you get 10 pips, that's a beautiful impulse candle. 10 pips is 10 pips, and that's 5 minutes. So you have an entire 5 minutes to scale out of that candle. Okay, so there's no reason that you're continuing to hold, because next candle could be a bullish candle. This is our retest candle. It comes up bullish, but we're looking for a rejection right here, and hopefully get a wick, and then sellers push it back down, and then we break here and continue to the downside. But we don't get that. It's a bullish candle, completely engulf that, come back into the consolidation zone. We break above the signal line, but volume right there. You can, if you really get good at trading, you can start to take buys in here. But as you're learning, you want to make confirmation trades up here so you don't get faked out. And then this here is still a really nice trade. And then you can start to see the bands now are starting to open up. They're expanding. There's volatility, and look at the price now starting to move. So it was coiled up in a little spring, and then boom, they opened it up, and there's all our pips. Okay, and then it starts to come back to this signal line, and you start to see it again. Now the bands are getting tighter, and then when we see some nice consolidation, we can trap those candles and see what happens next. Okay, so look at here where it really opens up. Okay, so again, you have it plotted up here too. They're getting tight. I would box all of this in. And remember what I told you before. If the price is above the signal line in here, it's got a probability of breaking to the upside. Yes, it does. But also you got to be aware of fake outs. Okay, so what they did was they faked it out here. They made it look like it was going to continue to go bullish. They faked it out. They brought it down. This is a great sell scalp, but understand that they could be bringing it right back up. Okay, this could be a nice little liquidity grab. It comes down. They pick up liquidity and then they take it right back up here and then continue to move up. Okay, look at the market continuing to move. Okay, so this was this was set up as a bullish move, but you got to watch for fake outs. Okay, and then this is also an inverse head and shoulder pattern. Here's your left shoulder, here's your head, here's your right shoulder, there's your breakout, continuing to move up. Okay, top of the Bollinger Band, and look at how the bands are now increasing and they're moving. The signal line is also telling you a lot. The signal line is continuing in it to move up, so price action is moving up. When the signal line starts moving down, then price action is moving down. Okay, so these are Bollinger Bands. Again, signal line is your 20 SMA. Your upper and your lower Bollinger Band are separated by 2 standard deviations. You can use them as support and resistance, but I would prefer that you guys use your price action, support and resistance, higher time frame, hourly, daily. Then you'll know when it's reaching really overbought, oversold conditions. Okay. And now we're going to move on to Fibonacci's, guys. Okay, so if we're trading this, like right here, so if I wanted to see now trading forward, the Fibonacci retracements, let me just pick a different area. Okay, we could do even also a different chart. So if we started to come into trade and I start to see right here, okay, so let's say I started my session right here. I can back test this right here. Okay, so if I started my session right now to trade, I see we have a high to a low. So if I grab my Fibonacci tool right here, I plot it from my swing high to my swing low. Okay, so you see I have a high up here, this top wick to the bottom wick. Now I want to see, is price action going to continue to go bearish, or are we going to start to reverse and start to come up to this area? And then what we could be looking for, this is a downtrend. So what you could see is price action come up to here, might get rejected and pull back, continue to move up here, maybe a pullback, come into this 50, and then we're looking to test up here, the 618, okay? And in a downtrend, we were looking to make a lower high and then get rejected and come back down, and then we're looking for this type of pattern to break right here. But if we get direction volume closing above 618, then maybe this downtrend is beginning to reverse and a possible uptrend is forming. So we're following this extension right here. Maybe price action volume is going to close up here, test this area, and then we get a break. Okay. And then now we're breaking out of here. This was our high. This was the swing high to swing low. If we get now a nice breakout with volume, we'll get a higher high, and then we'll see price move up in that direction. Okay, and then this is our zones, and it gives you the exact numbers. This is the Dow Jones US 30 on the 5 minutes. So I can see my swing high. There's my 1, and it's placed at 35,450. You can see the number right beside it. My next area is 786, which is exactly 35,434. So it starts to come down. You can see the candles, price action, going bearish, getting rejected up here. So this could have been a higher time frame resistance. Maybe it's an hourly or daily level. And then you can start to see that the 5-minute candles are starting to cool off. So I could also have this combined with my Bollinger Bands right now. How I haven't changed my Bollinger Bands. I see it's at the top of the band. We're getting rejected. It's coming down. I'm looking to see if it can hold this level. You can see that volume breaks below and closes below. So we can't hold the 786. Next area it's going to come down to is the 618. This is where we want to see some nice buying momentum come in, and we're looking to hold this area. Okay, we're looking to hold, come down and possibly hold here for some support like this, and then bounce back up, and we're looking for this direction. but we don't get it here. We don't get it. So price action now comes down and breaks below our golden zone. See how we break bearish candle? And now look at our Bollinger Bands. They're starting to expand now, but we have price action below our signal line and hitting the bottom of our bands. We're breaking below golden zone. This is a lot of confluence, okay? And now our next area is 0.5, the psychological level, 35,413. Next level is the 382, that's 35,405. Our next level is the 236, which is 35,394. And then we get down to here, 35368. So now I'm seeing, are we going to get some buyers to come in here and follow which direction we're going to go? Let's take a look at how this plays out. Okay, so again, we come down, we hold support, see the rejection wick. Okay, so I'm starting to see down here, maybe I want to get into a buy. If price action gets above here, we could look for a nice little reversal up here. Okay, and then I want to see price possibly come back up to the golden zone. Okay, if not, I'm looking for a sell order to break below here and then continue my lower low. So I could see price action. You know how we do. We look left. There would be a first take profit. Second one would be right around this area. Okay, I'll go down to there. And what I would do now is I could set up my sell position below this area. Okay, and I would look for a move like this. Okay, so now I'm just going to follow the price action, let it do what it's going to do. And this could be an area of consolidation down here, and I'm waiting for price to move up there. Or, okay, so it breaks down right there. Okay, so we got an impulse break. Okay, so we get the first bearish candle close. It came all the way down to this zone, but got a big rejection wick. Okay, so remember, if I look left, last time we came down to this area, 35,367, we have a lot of pin bar candles, pin. That's what started this big uptrend. So this is an impulse candle breaking down, but you got to respect all of these previous rejections because we could get that. And as soon as we hit down here, we had a big rejection. Okay, so this is an impulse candle. 376 all the way down to 365, 12 pips. Look to scale out of that because you got to respect. Last time we came down here, we had a lot of rejection wicks. Okay, a lot of buyers came in. So similar pattern can form here. Okay. See that? Again, it came down bearish again. So you had another opportunity to get out of there because now the market is starting to tell us something on these 5-minute candles. We're coming down, rejected. It came down bearish again and rejected again. 2 long pin bar candles. Now we got a bullish body coming back up to this area. Okay, so if you took that for 12 pips, you had 10 minutes to secure some pips because now the market is telling us that this thing could be reversing right here. And then see how this was a very, very bullish candle come up to here, but then they pushed it down. Now it's like an inverted hammer. This is still bullish. It closed above this area. So now we could potentially see it reverse coming back up here. Okay. So again, you're getting position for your entries. See how we're consolidating right here. And now we're starting to get more bullish. Okay. So we're just waiting for to see if we can get above that next area. See how it comes up, gets rejected. No buy order taken, no volume above the 236 zone. Okay, so it's coming down bearish. They could be cooling off the RSI. This could be a little pullback, and now it's going to continue the downtrend. This is leg 2 of the downtrend. So we have a lot of things happening. We could also see maybe an M and W pattern forming right now. Like there's tons of things when you're following price action, and this is where patience and discipline comes into play. Unless you want to scalp inside here, yeah, you can do that all day. You can scalp from 0 to the 236 zone, and it's nice pips. You got a 20 pip box in there. So every time we're catching support down here, it moves up to there, 20 pips. It could also retrace 10, 15 pips again until we start to see it start to form higher lows off the bottom. So I can start to see now we're starting to form some higher lows, and we could be coming back up here. Okay, again, we don't get it. Look at the fake out. They bring it down bearish, and again, nice bullish candle coming up. Again, they hold it down, but what are we doing? We're forming still higher lows, okay? And now price action, if you're looking at the Bollinger Bands, guys, price action now, where is it? It's starting to close above the signal line, okay? That's the first time in a while we're above the signal line, and we're getting ready for this area. Okay, so you see how we don't get it yet. We were forming in an ascending triangle, ready for that buy, but it didn't happen. They're still holding it down. Okay, so maybe a sell order down here is coming into play. But again, this is a wide area because again, if you're using Fibonacci tools, you see how it's got like a 20 pip area. When we're scalping this, you would have, I would have like a support level right here. I would have it boxed in like right here. From here to here. That's why always price action, guys, is king, because you see the breakout, you could collect 10, 15, 20 pips always on these plays. But if you're just relying on the Fibonacci tool, it's like a 20 pip range. You can calculate how big the ranges are, okay? And then we start to break down now, okay? And then again, if we just break below here, it could come down to our next level. Okay, now you start to see it break out now, okay, coming back up, breaking out, and then there's a nice move, okay? Breaking out here, that was a nice big bullish engulfing candle, but again, they push it down, So there is a big battle at this area. This was the Dow, the US 30, okay? So it was a big battle between sellers and buyers, okay? But that's how you want to plot like these Fibonacci tools if you're using them, and the Bollinger Bands, okay? So I'll show you like a different pair, and then I'll show you a different time frame, okay? So if we go to gold, let's say we're looking at gold, okay? So a way how you can plot this is, these are the Bollinger Bands. So right now, like trading live gold, see how the bands are coiled up real tight, okay? There's going to be a possible move coming up. So you could have it boxed in right here, okay? And then you're anticipating the move to the upside or to the downside. And then you want to grab, there's like a resistance there, support there. Price action is going to continue to consolidate in here. But once these bands start to open up, we get some volatility approaching 8 p.m. Eastern time and then 9 p.m. Tokyo. Then we're going to start to see some moves on gold, okay? And then what you can also do, guys, is let me just get rid of this Bollinger Band. I want to show you guys more with Fibonacci. So Fibonacci, if we're scalping 5-minute candles, what you can do is you can come to your hourly candles as well to get your higher time frame. So if I'm trading now, if I'm going to scalp the markets on my 5-minute candles, and these are my hourly candles, I don't need to go all the way back to see where price was last week. Maybe I just want to get this swing high to swing low on my hourlies, and then this will help me with the higher time frame Fibonacci's on my 5 minutes. So I go from that wick, I come down to here, and where's price action on the hour? Look at it, it's consolidating right in the heart of the golden zone, 618 and the 50. See, it's consolidating, so we'll get a next move coming up or down. But now when I flip to my 5-minute candles, remember I plotted it on my hourly candles, now it holds more weight. So when I come to my 5-minute candles, I have it all set up, okay? So here it's set up, my golden zone, and down to here. So now it's just up to me. When I'm trading my 5-minute candles, I could have like my own lines, like right there's my 5-minute support. I do have like my resistance right there. But if price action starts to close above here, I know I'm starting to close above my hourly levels, okay? Because I plotted my Fibonacci's on my hourly candles. So remember, they hold more weight, okay? So that's another strategy that you can use. You can either plot them on your 5 minutes, and you can plot them on a higher time frame as well, okay? And if you want to just do like a few candles, like you can catch retracements on a few candles, okay? So if I want to see this from here to here, you can get your fib tool and you can go low to high right here. So you can play around with this, low to that wick right there, okay? And now I'm watching this play. That right now I'm watching this leg. So this leg came up, came back, pulled back, it held at the 50, didn't even come near the 618. Buyers are continuing, consolidated in this range. We break out right there, comes back, retest, and could be coming out. So now we could be coming up to our 618 on our hourly. This is inside our 5 minutes, but this is the bigger one, okay? So you can plot Fibonacci's within Fibonacci's, okay? So you could have a higher time frame, and also you could do your scalping inside, okay? So there's multiple ways how you can use this tool, guys. So it's 8 o'clock, guys. I'm gonna open up the floor, guys. If you guys have any questions, you guys are welcome to unmute yourselves and ask a question, guys, about Bollinger Bands or Fibonacci's, guys. If you guys don't want to unmute yourselves, then just in the chat box, I'll read the chat and then I'll get some questions in there.
I got a question.
Yeah, Gregory, what's up, bro?
So this is more of like an advanced question, but I noticed you don't use the negative 0.618 or the 0.7 or 272 for like target or take profits
For
levels.
the breakdowns, if we break down below zero or breakouts.
Yeah.
Yeah, you can also add Fibonacci extensions when you start to break out. But I love trading price action. So I'm always doing if we start to break out above then I'm looking left and I'm getting my price action left. Because I rely more on price action than Fibonacci tools and indicators. But I use these as combined. Some of them, some platforms, when you plot them, they give you your extensions. Like see here, trading view, see how it opens up wider. So when you're breaking out now out of the zone, see how now like where it was tighter in here, as you're breaking out now you're going to get the bigger moves. So then it plots from 1 to your 1.618 right up here. So, and also on negative, it's got it there. Some platforms automatically put them for you, but some they don't have it, and then you got to add a Fibonacci extension tool when we get a breakout. But yeah, good question. It's all personal preference if you want to add those. I just don't like adding too much clutter on my charts. I like to keep it clean a little bit. I follow more price action. So I know that if we break out of here, my next take profit will be, I look left and then I try to see where we had a candle body to body or possible consolidation. And then I know exactly where it's going to go before it even comes to the Fibonacci levels. Okay. I'm already taking profits before it even gets up there. So I'm just looking left and I'm doing my own thing. Okay. But good question, bro.